you can be held to be personally liable for that tax debt. So you end up stuck because you've got this bill and it seems like there's nothing you can do about it. It's very easy to be late with super. The lesson is that with these director penalty notices, it looks like there's not a lot of options, but often in the detail, that's where you get some options. In the previous video, I talked about the unwanted gift of receiving a director penalty notice in the mail from the tax office. And I went through a case study of somebody who had a company and had PAYG and GST debt, had been issued a DPN, had been sued by the tax office, and then we managed to win that particular case and went through how. And I said that I have a second case study of somebody whose company went into liquidation and it was totally deregistered and closed down, and then they received a director penalty notice for superannuation. And we managed to get a good result for that one too. And I said I'd do another video where I explain how that came to pass. So I'm going to do that now. I'll repeat a little bit of the basics of how a director penalty notice works before I launch into it, just in case there's people who did not watch the first video, and so anyone can understand this. But basically, a director penalty notice applies to directors. So you need to have a company. The company needs to have a tax debt, and then you need to be a director of that company. And if you're the director of that company, you can be held to be personally liable for that tax debt. Now, for the tax office to collect the money from you, they have to issue a director penalty notice first, giving you 21 days to put the company into liquidation or pay off the debt. Now, there's two types of director penalty notices, or in common parlance. There's the lockdown and the not lockdown. Now, if you have a non-lockdown DPN, or and you can have both debts, like you can have some debts that are locked down and some that are not locked down. If you have a non-lockdown situation, if you put the company into liquidation either before receiving a DPN or within 21 days of receiving the director penalty notice, based on the date on the director penalty notice, then you get the debt wiped off. They won't be able to collect the debt from you personally. But with a lockdown director penalty notice, even if you do the liquidation, you still have to pay, okay, and you can't get out of it. And the difference between the two is basically if you lodged on time. Now with super, it becomes really, really difficult because it's very easy to be late with super, lodging the super guarantee charge statement. And often what ends up happening is after a company's gone into liquidation, the tax office might check, what's happened with this company that pays super or whatever, and it'll do its own audit. And then it will work out a superannuation debt. And obviously it's late in terms of being lodged and it's obviously unpaid because they've just worked it out. But often that number is wrong. And so they'll collect that by issuing a director penalty notice and going after the director. Now, the difficulty is that normally what a company would do is they'd say, hang on, you say I owe this much superannuation, I don't. The company would provide records and say, look, you can see I've paid, here's my bank statement, this is the actual list of employees. And you could go through it employee by employee. And you could actually work it out, But with a director penalty notice, the situation is different. Here the company's gone. The director just gets a lump sum. So it will say, for this 3-month period, you owe this lump sum. For this 3-month period, you owe this lump sum. No breakdown, nothing. Okay? And if you ring up and say, I want to challenge that or the super's wrong, they'll say, look, only the company can challenge it. The company's gone. So the company can't challenge anything. It's gone into liquidation. It's deregistered. It's dead and buried. And it can't come back. It can't say, you can't hand in any of this stuff now while it's dead and buried like that. And the tax office won't talk to you about it because they have an issue with, confidentiality because, this is a separate company and relates to the company. It can't share this material with you, even though it would have done that, while the company was around, and before the liquidation. So you end up stuck because you've got this bill and it seems like there's nothing you can do about it. So the client was in this particular situation. Now, it is possible to do something about it because we did something about it. But what it involves is basically this. You have to be able to show very easily that the director penalty notice has to be wrong, And luckily, the client had all of the data from the company. We could go through, we could work out what the superannuation should be. And it's not as easy to work out the superannuation number exactly as you'd think, because the way superannuation is calculated is based on a formula which doesn't make sense to a normal person. A normal person would think, okay, I have not paid superannuation for this 3-month period. I know how much it is. It's this. Okay? But the formula that the tax office uses isn't that. The formula the tax office has to use by legislation is they take that number as a starting point, and then they add a 10% interest rate and a fee, and there's, based on the number of employees, there's a charge. So you then have a situation where you're like, well, what's the extra add-on? How do I calculate that? It's actually calculated as a 10% interest rate up until the date you hand in the SG charge form. And so if the tax office did an audit and they worked out the super, only they know the date of handing in the form because they're the ones who handed it in. And so they're the only ones who can tell you what the interest amount should be, and therefore what the total bill should be. So it's not that simple to calculate. And if you ask them, what date did you use, they're not going to tell you. So what you're looking for here is being able to find a way of easily showing that the figure has to be wrong, and then enlisting the help of someone at the tax office who is willing to do the work of actually helping you to solve this problem. And it has to be done through the collection side of the tax office, okay? And you show them the information. In this case, we were lucky. We got a very nice person, very helpful person, who was willing to look into it. We said something. It was very obvious that the number was wrong, and then we just made it super easy for them to be able to see and work out the number. And I think the bill was basically halved, or almost halved, as a result of that, just through doing that process. Now, you can't get the absolute best outcome that you could if the company was alive, but you can still get a pretty good outcome. And if you get someone at the tax office who's helpful, it makes a really, really big difference. And so that was how we were able to achieve a good outcome in that situation. So the lesson is that with these director penalty notices, it looks like there's not a lot of options, but often in the detail, that's where you get some options, because these are mass produced, the numbers are mass calculated, and it doesn't take into account the individual circumstances of the particular person. And sometimes those individual circumstances matter and make a big difference, and they can. So I hope you found that helpful, and if you do have any questions, or if you've received a DPN, I hope you haven't, but if you have, feel free to give us a bell. Happy to help.